Welcome to this video on the 2026 gambling tax trap. Previously, breaking even at a casino meant you owed the IRS nothing. Starting in 2026, this is no longer the case, and many bettors are unaware of this significant change in tax law. The core issue is that breaking even may now mean paying taxes. If you win $10,000 and lose $10,000 in a year, under the old rules, your taxable gambling income was zero. Under the new 2026 law, you would still owe the IRS money on that break-even year. This change is due to the new law, sometimes unofficially called the One Big Beautiful Bill Act. Before 2026, itemizing gamblers could deduct losses dollar for dollar up to their winnings. The new law imposes a 10% haircut, meaning you can only deduct 90% of your gambling losses. The remaining 10% cannot be carried forward or offset. Let's look at the math. With $10,000 in winnings and $10,000 in losses, your allowable deduction is $9,000, which is 90% of the losses. This leaves a taxable phantom income of $1,000. Even with zero profit, the IRS considers $1,000 as taxable income. What if you actually lost money? If you lost $12,000 but only won $10,000, your deduction is capped at your total winnings, which is $10,000. The extra $2,000 in losses disappears and cannot be used to offset other income on your return. To protect yourself from the new IRS regulations in 2026, there are 3 golden rules you should follow. Rule number 1, you must itemize. The 90% deduction rule only applies if you itemize on Schedule A. If you take the standard deduction, you owe taxes on every dollar won, with no losses allowed. The 2026 standard deduction thresholds are over $16,000 for single filers and over $32,000 for married couples filing jointly. Rule number 3, learn session accounting. You do not have to report every single spin or bet. A continuous session is reported as one net result. Session netting can significantly lower your gross winnings and minimize the impact of the 90% deduction cap. For specific advice, consult a CPA. Rule number 2, keep an ironclad logbook. Do not rely on sportsbooks or casinos. While they send a W-2G for big jackpots, they don't report your net losses. You must log the date, location, type of wager, amounts won and lost, and people you were with. The bottom line is that the government is taking a vig on your gambling losses. This fundamentally changes the math for high-volume bettors. Remember to itemize, log everything, and use session accounting to minimize your tax liability.